Welcome back to Investing Talk Podcast. Today, we're tackling a question that's popped up a lot in our community, one many of you have asked us to look into. Is Rocket Lab a good time to buy right now? We've pulled together some, really interesting source material to help us unpack this one for you. We're looking at big market shifts and the company's own details. Before we dive in, if you find this discussion helpful for making sense of the markets, please do us a quick favor, hit subscribe, give us a like, maybe leave a comment. We genuinely love hearing from you, and your feedback really helps shape these conversations. And if you'd like to support what we do here, maybe consider buying us a coffee. All the details are in the show notes. Also super important, if there's a specific company or a topic you'd like us to explore in a future session, just drop it in the comments below. We do read them. So Rocket Lab, it's a name that, brings up images of space, innovation, maybe high growth potential. There's been a lot of chatter, especially with some recent news. We've got an Invest article that details MSCI's upcoming index revisions. That's kind of the macro market event.
And then we have a really thorough stock analysis specifically on Rocket Lab itself, getting into the micro fundamentals. Our goal today is really to cut through the noise, give you the key insights, and help you understand what all this means for Rocket Lab as an investment. We want to connect those dots for you.
Yeah, and what's really interesting here is exactly that intersection, isn't it? You've got this global market rebalancing event, something that seems kind of detached from one company, but it can create these ripples that directly affect its value, its trading. Then layering that with a close look at Rocket Lab's actual business, its financial health, it just gives us a much richer, more complete picture than looking at either one alone. It's like seeing the forest and the individual trees,
Okay, let's start with that forest view then. The big market news first. This Invest article highlights some pretty significant revisions by MSCI. For anyone not familiar, MSCI is a huge global index provider, right? Their indexes are benchmarks for tons of capital. What exactly are these changes, and when are they actually happening?
Right. So MSCI is set to revise its ACWI, that's the All Country World Index, and also its emerging markets indexes. And these changes, they're happening really soon, effective August 26th. In this specific rebalance, they're adding 42 securities and, interestingly, removing 56 across their different indexes. Now, this is a regular thing, a semi-annual rebalancing they do to make sure the indexes still reflect the global markets accurately. But it always creates some ripples. Think of it like a massive synchronized reshuffle for all the funds that track these indexes.
And this is where it gets really interesting for Rocket Lab, because it's right there on the ad list, isn't it?
Yeah.
What's the significance of MSCI deciding to include Rocket Lab now?
Exactly right. Rocket Lab, along with SoFi Technologies and Affirm Holdings, they're among the notable U.S. companies being added to the MSCI World Index. And what's particularly noteworthy, I think, is that these three are the largest by market cap among the new U.S. additions. So their addition isn't just a technical tweak. It kind of reflects this broader, growing investor interest, maybe confidence, in specific high-growth sectors, like fintech and, crucially for us today, space technology. There are other additions, too, like China's CITIC Bank, DN Hostatica Sentosa, Laupu Gold in emerging markets. Shows the global scale, really.
Okay, so for you, the investor listening, what does this actually mean, especially if you hold, say, ETFs or mutual funds tied to these MSCI indexes? Is this a huge deal or just background noise?
That's a really important question, the practical impact. For ETFs, exchange-traded funds that directly mirror these MSCI indexes, think iShares, MSCI, ACWI ETF, iShares MSCI World ETF, that kind of thing. This rebalance isn't optional. It's basically directive. Their portfolio managers have to adjust. They'll be selling the stocks being removed and buying the ones being added, like Rocket Lab, to match the new index. This forced buying can create what we sometimes call temporary price dislocations, little bumps. However, the overall impact on someone holding these broad ETFs long-term, it's generally considered pretty fractional. Adding or removing one stock usually doesn't massively change the portfolio's risk or return, mainly because, the ACWI alone covers over 2,800 companies. Rocket Lab is still a small piece of a giant pie.
But I'm guessing for more active traders, this isn't just fractional noise. Could there be some real opportunities tucked away in there?
Precisely. Yeah, the changes can definitely offer tactical trading opportunities. High-profile additions like Rocket Lab, they could attract a lot of extra attention and, importantly, short-term trading volume. This surge in demand, partly driven by those passive funds having to buy, can sometimes push a stock's price up, almost regardless of its immediate fundamentals for a short while. So yeah, while the long-term ETF holder might not see a big change, those first few days, maybe weeks after the rebalance can be pretty dynamic. Could offer entry and exit points for folks playing the momentum. It's where that macro event directly hits the micro price action for a bit.
Okay, that really helps set the stage, understanding the market currents affecting Rocket Lab. Now that we've got that broader context, let's zoom in from the market view to Rocket Lab itself. Our second source gives us a detailed stock analysis, kind of lets us look under the hood. What's it telling us about Rocket Lab's financial health, its current performance? Are they just riding these market waves, or is there real substance there?
Well, connecting this back to why Rocket Lab is appealing in the first place, you see a company showing truly exceptional top-line growth, revenue growth. For the trailing 12 months, Rocket Lab reported $504.26 million in revenue. That's a really strong 78.34% year-over-year jump from 2023. So, clear, aggressive expansion, growing demand for what they do, that kind of acceleration, that's what often gets growth investors excited. However, and this is a big however, the company is still unprofitable. They reported a net loss of minus $231.31 million, negative earnings per share of minus $0.46. And it's worth noting those losses actually ticked up slightly year over year. And this is pretty common, right? For many growth stage aerospace companies, they're pouring money into R&D, expanding manufacturing, pushing tech boundaries. Profit often comes later.
Right, so really impressive growth. You can see the innovation engine working, but yeah, it's still solidly in the red. Given that, how does Rocket Lab stack up against its competition? What about its position in the space industry, which, let's face it, is getting more crowded and pretty cutthroat?
Yeah, it really is. Rocket Lab is definitely a recognized leader, particularly in the small satellite launch market. And they do more than just launch rockets, which is key. They offer integrated launch and spacecraft manufacturing services. Their reputation, largely built on the Electron rocket platform, known for reliability and this growing suite of space systems like their Photon spacecraft, they've really carved out a niche by specializing in those small and medium payloads, offering dedicated, responsive launches, and their vertical integration controlling a lot of their own manufacturing helps with costs and quality control, supposedly. But the market is evolving super fast. You've got giants like SpaceX with Starship and Falcon 9 dominating bigger payloads. And then these emerging private launchers like Firefly, others too, they're intensifying the competition everywhere. Rocket Lab's upcoming Neutron rocket is their move into that medium lift space. But yeah, that's a very, very competitive arena they're stepping into.
That makes a lot of sense. High growth, cool tech, but yeah, tough field where you got to keep running just to stay in place almost. Let's talk price tag, though. With all this potential, what about the valuation? Is it priced like the leader it wants to be, or is the market maybe getting a little ahead of itself here?
This is where the analysis really starts waving some caution flags for potential investors, I think. Since Rocket Lab isn't profitable yet, you can't use a traditional price earnings. A PE ratio doesn't apply. So instead, we look at its price sales ratio, the PS ratio. Basically, how much are investors paying for each dollar of revenue the company brings in? And that number, it currently stands at around 42.5. Now, just to put that in perspective, that is an extremely high valuation, even for a high-growth sector like commercial space. For comparison, established aerospace and defense companies, their PS ratios are often down in the low single digits, maybe 2 to 5, something like that. Even fast-growing tech companies rarely hold on to valuations like that without a super clear near-term path to big profits or just undeniable market dominance. A PS of 42.5 kind of suggests the market is pricing in perfection, banking on Rocket Lab not just growing but dominating for years without any major setbacks. It's optimistic.
Wow, 42.5 PS. That doesn't just sound steep. That sounds almost eye-watering. What are the professional analysts saying? The folks paid to crunch these numbers, are they echoing this sky-high valuation?
Well, it's interesting. It's a bit nuanced. Most analysts do actually have a buy rating on Rocket Lab. They seem to believe in the long-term potential, the market position. However, their average price targets for the next 12 months, they're clustering in the range of about $38.50 to $42.27. And here's the kicker. That's actually below the stock's current trading price, which was $44.38 as of August 22nd, 2025. So what that suggests is, according to their models anyway, the stock might already be fully valued, maybe even overvalued, at least in the near term. They see the long game, but they're kind of signaling the current price might have run ahead of that fundamental value, at least for the next year or so. It creates this weird tension, right? Buy the company long term, but maybe not at this exact price today.
Okay, so the fundamentals paint this picture. Strong revenue growth, leader in a niche, yes, but also losses, that super high valuation, and analysts hinting it might be overvalued right now. It's complicated. What do the technicals tell us? The chart patterns, how the stock's actually moving?
Yeah, looking at the technicals, Rocket Lab has definitely seen extreme volatility. That's kind of par for the course with these high-growth, more speculative names. Its 52-week range, get this, from a low of $5.74 to a high of $53.44. That's a wild ride. Now, the general trend over the past year has been upwards, but the current indicators, they sort of suggest maybe a short-term pause or even a potential correction could be coming. For instance, the 14-day RSI, the Relative Strength Index, that momentum measure, it's currently at 31.06. That's just nudging into what traders call oversold territory. Suggests a lot of selling pressure recently. Now, that could sometimes signal a near-term bounce as maybe selling gets exhausted, but it's definitely not a guarantee. Need to see it with other signals. Immediate support, like a floor for the price, seems to be around 40-41 oneers with resistance, a ceiling up around $53.
And stepping back from just the charts and numbers, what about the overall market sentiment around Rocket Lab? What's the general mood, the vibe out there among investors?
Sentiment seems a bit mixed, which maybe isn't surprising given all these conflicting signals we're talking about. You've got the consensus analyst rating it buy, like we said, but then their own price targets are lagging the current market price, which kind of dampens that enthusiasm a bit, right? On social media, trading forums, that kind of thing. Sentiment seems generally pretty bullish. Lots of retail investor excitement for the long-term vision, even with the recent price swings. However, if you look at the broader market mood, the Fear and Greed Index is currently at 39. That indicates fear among participants generally, and that broader caution. It can make investors kind of shy away from more speculative assets like Rocket Lab, or at least approach them more carefully, so you get this push-pull, company-specific excitement versus general market nerves.
Okay, with all that in mind, let's talk catalysts and risks.
Yeah.
What are the things coming up, short-term or long-term, that could push Rocket Lab higher? Or conversely, what are the big risks that could knock it down? What should investors really be watching?
Sure. Upcoming short-term catalysts, well, the next earnings report is a big one, scheduled for August 7th, 2025. Earnings are always critical, can definitely drive volatility based on the numbers, and crucially, the guidance they give for the future. Also, new contract wins, successful launches, especially if they keep the Electron's track record strong or show good early progress with Neutron, those would be significant. Tech demonstrations too, like advances with their Photon satellite platform, could be positive triggers. Longer term, we'd be looking at their diversification into medium lift with Neutron. That's a big strategic shift. Also, expanding that space systems business, Photon offers a whole satellite solution, potentially higher margins there. Regulatory shifts favoring commercial space could help, and maybe potential M&A activity, either Rocket Lab buying smaller companies or even becoming a target itself down the line.
Makes sense. And the risks. Because every investment has them, especially, like you said, in a high-growth, cutting-edge sector like this. What are the key downside worries for Rocket Lab?
Yeah, definitely need to consider the downside, stock-specific risks. The big ones are those persistent negative earnings and cash flow. It means the company is burning cash. If losses continue, they might need to raise more capital. And how do they do that? Often by issuing more shares, which can lead to dilution for existing shareholders. Your slice of the pie gets smaller. And that extremely high valuation we talked about, that significantly increases the downside risk if growth slows even a little bit, or if the company stumbles on execution, misses launch targets, has a failure, something like that. The higher they fly, the harder they can fall valuation-wise. And then you've got the broader market and sector risks. We've seen periods where investors just dump speculative tech stocks. That risk-off sentiment, that would hit Rocket Lab hard. Increased competition, we mentioned that, could eat into their market share or margins. And finally, geopolitical stuff or changes in government space budgets. Those could definitely impact demand across the whole sector.
Okay, this has been incredibly helpful walking through all the layers. So let's bring it all together. What does this mean for that original question? Is Rocket Lab a good time to buy now? Right, combining the market tailwinds, the company specifics, the valuation. What's the overall investment thesis here for our listener?
Well, the analysis we looked at gives it an overall rating of 6 out of 10, which tells you something right there. It's not slam dunk either way. Rocket Lab clearly shows that exceptional revenue growth, it has strong core technology, and it definitely holds a leadership spot in the small satellite launch market. Those are real positives. However, those positives are significantly weighed down by the ongoing net losses. That extremely high valuation, that 42.5 PS, is hard to ignore, and just the inherent volatility of being a growth company in a very capital-intensive industry. And with most analyst price targets currently below the market price, it kind of suggests there might be limited upside in the short term. And there's a real risk of a correction if sentiment changes or they miss any key milestones. It's really a story of huge future potential balanced against some pretty stark current financial realities and very lofty market expectations.
So given that really complex profile, who is this stock actually best suited for? Is it for everyone or really only a certain kind of investor?
That's a crucial distinction. And yeah, honestly, it's definitely not for everyone. Given everything we've discussed, Rocket Lab seems best suited for, well, maybe two groups. First, experienced, very risk-tolerant short-term traders who are looking to capitalize on that volatility we mentioned, people comfortable with technicals, quick moves, high risk. Second, maybe speculative long-term investors, but they need a very long time horizon. Think 5 years, maybe more. And those long-term folks, they need really strong conviction, not just in Rocket Lab, but in the whole future of the commercial space sector and in Rocket Lab's ability to execute flawlessly over many years to eventually reach profitability and keep that market leadership. It is explicitly not recommended for conservative investors or anyone focused on income or, frankly, anyone with a low tolerance for potentially significant swings in their capital. For short-term trading, you'd want clear momentum signals or maybe confirmation of oversold conditions turning around. For that long-term position, you really have to believe deeply in that vision of tomorrow and be prepared for what could be a very bumpy ride getting there.
Fascinating stuff. We've really covered a lot, from how global index changes like MSCIs can ripple through the market, right down to Rocket Lab's pretty eye-popping PS ratio of 42.5. It's clear that while the company is a leader in a super exciting, important growth area, its current valuation, the lack of profits right now, and that competitive pressure, it all creates a really complex picture for anyone thinking about buying. It's that blend of future promise and today's financial reality.
Indeed. It just highlights how important it is to look beyond just the headlines, doesn't it? You need to understand the market context, pushing things around, and the company's actual fundamentals, the business, the path to profit, the risks. Without both, you're really only seeing half the story.
Thank you for joining us for this really detailed look. Ultimately, whether Rocket Lab fits in your portfolio, that depends entirely on your own risk tolerance, your investment timeline, and your personal conviction in that future vision. So the question for you to think about, mulling over everything we've discussed today, is maybe this. How much are you truly willing to pay today for a vision of tomorrow? And how much unwavering belief do you have that that future will actually arrive as planned? Until next time, keep learning, keep asking questions, and happy investing.